Okay, so if you're day trading and you want to make it in space, I'm going to make you a millionaire in 60 seconds.
I don't like the way that starts. Hi, my name is Jack, and I am what you would call chronically online, but I prefer to say I'm just in touch with the kids. I spend a lot of time scrolling TikTok, and as a former person who used to give financial advice, I come across a lot of really bad financial advice, specifically day trading TikToks. You see, the thing with day trading is that it is pitched as this get-rich-quick scheme, but really it's more of a how to become poor speedrun any percent. You're probably not going to make money day trading. 85% of day traders don't make money, so I wanted to take a few investing TikToks, including some day trading ones, talk them through, tell you what's good, what's bad, and what to look for if someone's trying to give you day trading advice. So let's jump into it. Before I continue the video, none of this is financial advice. All of this is just for education and for entertainment purposes. I'm not here telling you to buy anything or do not buy anything. Please speak to a financial advisor, someone you trust, before you make any investment decisions.
Here's a trading strategy that's so good,
oh god, it's so good,
you won't want to use anything else. The reason this strategy is so good is because it's fully based on detecting institutional volume.
So the problem immediately is that I never trust anybody who is probably trying to sell me something, and I can tell that they are trying to sell me something. I mean, I've watched this already because I picked the video. My biggest thing is, if someone has a great way to make money and it's guaranteed, why would they share that with you? They can make a lot more money doing this, supposedly, than they could selling a course, so why would they do that?
And these are called order blocks. And we can trade these by checking how much buying or selling volume happened. And if you want to get access to this indicator, just check the comments section down below.
Yeah, so what they're selling is an algorithmic indicator that basically tells you when large institutions are buying and when they are selling. And theoretically, this should give you a signal to jump in or to sell at the same time. I did a little bit of research on Lux Algo and their premium, and basically the general consensus is it is as good as a shot in the dark, if not bad. Again, if this algorithm was as good as it sounds like it's supposed to be, then they would not be giving it to you for a fee. They would just be trading and making an absolutely ridiculous amount of money. I will always maintain you can never defeat Wall Street. I give that first TikTok 2 out of 10. And before we keep going, please like, comment, subscribe. I really appreciate the support. I love doing these videos. It's renewed my interest in the topic. I was a little bit burnt out after working in the bank, but I love that you guys love it, so I love sharing my expertise. Thank you.
Is day trading profitable? So let's find out.
85% of day traders do not ever beat a benchmark index in any given year like the S&P 500. You're better off just to stick your money into an ETF and just let it ride.
I've been doing this for a couple of years, so I can speak from experience. Full transparency, in my first year, I probably lost about $2,000 to $3,000.
So there's always something in these videos that I notice. They're really kind of designed, it's almost like if you took a motivation video and mix it with a finance video. They're always showing them doing good things like going to the gym, walking in beautiful places, doing cool things, driving cool cars, flashing cash, and I think that's all just to get you to buy their product. Again, if they had some sort of information that was giving them an edge in the market, they would not be telling you. That's not information you give out for free or for cheap. If you can make millions with an algorithm, then you should keep that algorithm pretty close to the chest.
Due to the fact that I was uneducated. 2 was pretty much the same thing. I was still uneducated and I was still trying to put it together.
If you do want to get educated on how to really get into the nitty-gritty on how to trade and what you would need to do to give advice, I would definitely recommend skipping any of these TikTok courses. And if you're in Canada, get your Canadian Securities course. And if you're in the States, get your Series 7. Both of these would allow you to work as a financial advisor. And that's really the baseline that you need to get started to become educated. Past that, you need work experience and a ton of other courses to become a certified financial planner. I would not trust anybody who is trying to tell you they have a course to teach you how to do something when they don't have the qualification to do it.
I lost another $2,000 to $3,000 in that year. At 3, I was starting to find a little bit more success and it was all starting to make sense.
Again, there's a lot of psychology in these videos too, just by the way they're shot. Here now is him back at the gym. He was just wandering around in the first shot when he said he was failing. Now he's pushing 40 kilos on each arm on a bench press. Now I can guarantee you this is the same day. But yeah, there's a lot of just very subtle psychology in these videos to make it seem like these products are worth it for you.
Yeah, I was scraping 5 figures. I made about $9,000 to $10,000 that year. And in year 4, I started having the right people around me. I started learning a lot more. I started holding myself accountable.
And then here's the next part of the psychology of the day trading video is now you are seeing him showing charts on the laptop. You are seeing the view out of the fancy apartment that's got floor to ceiling windows. All of these are just very little signals for your brain to try and get you to spend money on the thing that they're really offering. They're not successful day traders, they're successful marketers, which is a grind in itself, but it's not a transparent grind, and that bothers me a bit.
I was able to make well above 6 figures. So from my experience, it's been both profitable and it's been unprofitable. Obviously, it was worth it for me because the profits far exceeded my losses.
And now here he is in a pool, again in what looks like a fancy apartment building or a fancy hotel or something like that, and just showing off that his trading course and mentors can get you what you're hopefully looking for. And it's kind of preying on vulnerable individuals, I find. A lot of these TikToks are generally targeted at young men, 18 to 22, those who may be falling down a path towards a bit of kind of the red pill, black pill. When I get really deep into the day trading algorithm, I really start to get some kind of toxic motivation content as well. And that really bothers me. Like I say, it's very, very easy to get down the wrong rabbit hole of content and only see things that validates for you that you are living this life that you are dissatisfied with, when really we should be satisfied with what we have and still strive to always do more. I give that one a 0 out of 10. Pretty pictures though. So this guy here, I actually did a quick short on this guy. He's called the 20-minute trader. He said he came up with this pattern in the first 20 minutes of every day that makes him thousands trading. Again, a lot of psychology here. He's got the microphone. He is sitting in what looks like maybe a fancy room with some high quality lighting. These are all things to make you think that he is qualified. Really, he is not a professional day trader. He has a course and a book to sell you. Which again, I'm not knocking selling books. I'm just saying that you should be transparent in your business practices and what you're really selling.
I watch some graphs moving across my laptop screen while I look for a few little simple signals. I have my phone ready to place an order. I see the signal.
Any brokerage you can get on your phone is probably not a brokerage that you want to be using for any high-level trade.
I buy. The stock goes up and I sell only minutes or even just seconds later. Then I close my laptop at 9:50 a.m. Eastern time, 20 minutes from start to finish. I've been doing this now for 2 years.
The other thing too is when he says he's been doing this for 2 years, that's through COVID, and COVID made the stock market go absolutely nutty, and it's finally starting to kind of correct itself out in some of these issues. And I don't know what's going forward, and if anyone tells you what's happening going forward, they don't know what they're talking about. It's very easy to always be right in a bull market. Your winners are really made in your bear markets, and we're starting to see who the winners are.
My friends for this video. I discovered the pattern and started making money with it.
If you think as a retail investor that you have started a pattern, noticed a pattern, there's a very, very good chance that someone else has already figured the pattern out, has already figured out how to make money from it, and it's already been priced into the market. The retail investor never beats Wall Street. 3 out of 10. He seems like a nice enough guy, and he seems maybe a bit genuine in what he's doing. I just think that he's got a false sense of confidence due to investing through a bull market.
I found 17 of the worst traders out there, and I'm taking trades against them.
I actually find this TikTok very funny. There is a genuine investing strategy called the Inverse Cramer strategy, where basically anything that Jim Cramer says, you just do the opposite. And this is done quite well. Just last week, in fact, Cramer had said that everyone should buy Silicon Valley Bank stocks because it was on the way down and it couldn't go up, and it was less than a week later that they went bankrupt. It's to the point now where I almost feel like Cramer is like helping people who are shorting quietly by saying all this news on TV, because it's impressive how much he is wrong for someone who goes on TV and says they are an expert. Yeah, if you have a small day trading account just for fun, try the Inverse Cramer strategy for a little bit, and I bet you'll do pretty well.
How it works: when one of these guys open a new trade, I do it too, but in the opposite direction, and when they close it, I close it too.
So this is, like I say, genuinely good strategy. This is something you can definitely do. The only problem is finding who the biggest losers are, and copying their trades in time. It's definitely possible. I'm sure this guy maybe has a course or something how to do it. But yeah, definitely a valid strategy.
I'm capitalizing on the fact that they are exceptionally good at losing. The truth is, the majority of traders are losing money. Why not do the exact opposite?
Yeah, he's completely correct. The vast majority of traders are losing money, and back copying their trades is something you can do if you want to try. The only problem is that unless, again, you know what you're doing, you're probably on the other side of his trades.
I'm sharing all of my trades from this strategy in my new exclusive Telegram channel.
There you go. You need to follow his Telegram channel, which probably costs money to subscribe to get these trades. The other problem is that I just don't trust anybody who is making me pay for investing signals, because what would stop them from just doing the opposite that they're telling me to do, and then you're literally paying to hold this guy's bag? I would be very careful. It's definitely a legitimate strategy, but I would not pay someone for any strategy. I give that one a 4 out of 10. Legitimate strategy, but he's charging money for it, so it probably won't work out that well for you. So this girl I really like. She's a fellow Canadian, so massive thumbs up. Shout out to my fellow Canadians. And she gives rational, real advice for normal people. She talks about dividend investing, ETF investing. She has very easy to digest information, and she really gets deep into the nitty-gritty, making longer form content on TikTok, and I love it.
Do you think it's too risky, but you still want to make your money work for you? I got you. Here are 2 ways that you can make your money work for you risk-free. First thing you can do is open a high-interest savings account. EQ Bank has a good one. They pay you 2.5% on every dollar.
So yeah, this is again a very great way to make a small amount of money if you've got cash to park that you don't want to take any risk with, or if you are more risk adverse and you're just kind of dipping your toes into investing. High interest savings accounts are a great option. They're basically the same as checking account, but just paying higher interest. You can shop around. There's tons of banks that do them. She also talks about GICs, guaranteed investment certificates, where you lock your money away for a certain amount of time and you get paid a interest percent on that. Right now, GIC rates are pretty good, but generally GIC rates do fall below inflation. So it's definitely something to keep in mind because you always want your money to be making more than inflation, or you are losing the purchasing power of that money going forward due to the time value of money. Another great way to dip your toes into investing, if you're a little bit nervous, is to do something called a market link GIC. So it's a principal protected investment. Say you put in $10,000 that's linked to a stock index of some sort. So whether it's the S&P, TSX, Russell 2000, a whole bunch of them are available depending on your bank and stuff. You're never going to lose that $10,000, but depending on the term of the GIC, most are 2 to 5 years. You'll get a percent of the gain of that stock index that it tracks paid to you. So your return, sometimes it's a minimum of like 0.5%, sometimes it's nothing, and sometimes they have a cap or they go unlimited. Depending on the banks I've worked at, they've had different rules, but those are definitely an option as well if you can lock that cash away and you want to have a chance at making more stock market-like returns on those investments.
You'll get $250 a year, which is $20.83 a month for doing nothing. And the interest compounds. Second thing you can do is go and buy a GIC. GIC stands for Guaranteed Investment Certificate. Again, EQ Bank has some good ones. You can choose how long you want to put your money.
So you can see there, 1-year GIC at 5%. Usually, especially right now with a little bit of uncertainty in the market, GIC rates are kind of all over the place, and short GICs are paying a lot more than long-term GICs because the banks would rather hold your money for a short period of time because they go and take that money and invest it or loan it out. So if the longer they're taking money right now with interest rates being a little bit up in the air, the better chance they have at losing money, and banks don't like to lose money. So right now, 1-year GICs are probably your best rate. Looks like EQ is paying 5% when this video is made. And you can see down the rest there, even 2 years is 4.7, 3 years is 4.35. So again, the longer that term, the less interest EQ is willing to pay because they don't know what rates are going to do in the future, and they don't want to overpay you compared to what they could get on a return depending on how rates play out in the next couple of years.
GICs though, you cannot withdraw your money. Your money is essentially tied up until your term is finished.
The only way you can break a GIC in most banks in Canada is undue financial hardship to the point where you would have to declare bankruptcy if you were unable to break that term, or due to death, basically. So that's the other thing to keep in mind, is you really cannot access that money. There is cashable GICs with the bank that I worked at least, but those don't pay as much interest since that money is available to you under certain terms. Like I say, I love Joy. She is doing great, wholesome content, and she actually knows what she's talking about, and she's not trying to push some trading algorithm or anything on you. Just straight up good advice. 9 out of 10. So this video is a guy talking about trade copying and how to hide a trade copier. So the reason he has to make this video, copy trading is technically legal, but the problem is that your firm needs to support it, and the copy trades need to come from a regulated firm, one that's registered to give financial advice. So basically what you're doing is you're setting up a bot that copies someone else's trade into your account automatically based on what they do. So the problem is that you're essentially getting indirect financial advice from somebody, and so there's regulations with financial advice. So him telling you how to hide a copy trader, potentially against security regulations, but the water is a little bit murky on that.
Your broker, if you're using a trade copier. Using a trade copier to copy Forex signals to your MT4 runs the risk of your account getting banned, especially...
Yes, it runs the risk of your account getting banned because there's a good chance that the person you're copying trades with is not registered to give financial advice, which is against security legislations. You get in a lot of trouble for that.
especially if you're using a prop firm account. Here's how to keep that from happening. The easiest way is just to adjust the stop loss.
Again, if you're using a copy trading bot on a prop firm account, that is a massive red flag. So prop firm is a firm that instead of using customer deposits, uses their own capital to trade. Then they'll bring on traders who either can make them returns or have a small amount of money to deposit with them. And then once you've proven yourself to beat certain benchmarks, they'll give you access to more and more of their capital. Now, this is a way to invest without necessarily using margin, but you pay a percentage of your gains to the prop firm, and so you need to prove yourself. So yeah, they're definitely going to ban you if you're copy trading, because like I say, you're getting financial advice from somebody, they don't know who it is, and they could or could not be a regulated person, and that could get them into a lot of trouble with security exchanges.
You can also hide the stop loss and the take profit from the broker, even though the trade will still have the stop loss and take profits. Finally, you can change the title of the trade. All signal providers trades have a label. For example, this one is from FX Premier. Your broker can see these labels. Activating this feature hides the label from your broker.
Again, potentially advice going against security legislations. Every province and jurisdiction has their own rules, but generally if you have to try and hide what you're doing from your broker, that's generally a no-no. When I worked at the bank, we had to take insanely detailed charting notes. We had to do so much paperwork. Basically, we needed to be able to, if we were taken to court, prove that we knew exactly what we did with that client, why we did it, and how we did it. So yeah, hiding things from your broker is real bad in the eyes of the security exchange, and if you are trying to hide your copy trading from your broker, that's a big red flag. 0 out of 10, probably illegal. Pretty cool shirt though.
Okay, so if you're day trading and you want to make it in space, I'm going to make you a millionaire in 60 seconds. These tips would have saved me.
I don't like the way that starts. You can't make me a millionaire in 60 seconds. That does not happen.
Millions of dollars. Stop trading every day. There's no reason.
Decent first step of advice, stop trading every day. Yeah, I would say so. Buy and hold generally is pretty good investment advice, but yeah, stop trading every day. You're just gonna stress yourself out.
Number 2, limit yourself to 1 to 2 positions per trade, meaning, okay, I'm entering a short. Don't enter a short here. You lose the trade, you turn your phone off.
Yeah, again, that's generally pretty good advice. Don't try and make too many bets at once, spread yourself thin. Only bet on 1 or 2 things that you want to bet on, and then yeah, if you lose, don't try and make that back. Just call it for the day.
Number 3, if you make profit on account, say you start with 500, get the balance up to 4,000, withdraw 3,500, and you leave the rest. You start from 0.
Also, a pretty good piece of advice, take your wins. Don't try and be a hero. Don't try and turn that 500 to 4,000 to 10,000. I've seen it on Wall Street bets a ton of times. People will make it big on some nutty options contract, and then they'll think that they are Iron Man, and they will fly a little too close to the sun and burn themselves out and completely destroy what could have been the start of a very nice retirement or a down payment for a house. 7 out of 10. Pretty good advice. Now this kid, this one actually is short about. I just had to throw it in here too because I thought it was funny. He's sitting in school, so he can't have that much money. If you have $27 million sitting in Coinbase, you need to check your head because that is horrific cash management, and you should not have that much money sitting in a crypto exchange of any kind. After we've seen what happened with FTX, after we've seen what's happened with some of these hacks and things that have happened with crypto exchanges, good God, get it off there and at least put it in a cold wallet if you actually have that much money. Stop using crypto exchanges for large buckets of cash. If he was actually that good, he would show us his actual assets and show us how much he owned. And that was the end. Thank you guys so much for watching this video. Let me know if you like the day trading advice that I have to offer and what other terrible finance content you would like me to pick apart. Have a great rest of your day. Like, comment, and subscribe.